gentlemen, welcome to the Invest with Dennis channel. Today we are talking about 100 stock market terms that every beginning investor must know. Prices, valuation, risk, strategy, and more. 1 to 10, market basics. 11 to 20, price and orders. 21 to 30, valuation matrix. 31 to 40, returns and income. 41 to 50, risk and volatility. 51 to 60, indexes and benchmarks. 61 to 70, company financials. 71 to 80, trading strategies. 81 to 90, market psychology. 91 to 100, advanced key terms. Number 1, stock, a share of ownership in a company giving you a claim on its assets and profits. 2, share, 1 unit of stock. Buying shares makes you a partial owner of a company. 3, ticker symbol, a short code, e.g. Apple, Tesla, that identifies a publicly traded company. 4, stock exchange, a marketplace, New York Stock Exchange, NASDAQ, where buyers and sellers trade stocks. 5, bull market, a period of rising stock prices, usually 20% plus gains driven by investor optimism. 6, a bear market, a period of falling prices, usually 20% plus decline driven by pessimism. 7, market cap, total market value of a company's shares, price times total shares outstanding. 8, IP, initial public offering, the first time a company sells shares to the public. 9, portfolio, your total collection of investments across stocks, bonds, and other assets. 10, diversification, spreading investments across many assets to reduce risk if one performs poorly. 11, bid price, the highest price a buyer is willing to pay for stock right now. Ask price, the lowest price a seller is willing to accept for a stock right now. 13, spread, the difference between the bid and ask price. Narrower spread, more liquidity. 14, market order, an order to buy or sell a stock immediately at the best available price. 15, limit order, an order to buy or sell only at a specific price or better. 16, stop loss order, an order that automatically sells a stock when it reaches a set low price. 17, volume, the number of shares traded in a stock during a given period, day or week. Liquidity, how easily a stock can be bought or sold without affecting its price much. 19, 52-week high or low, the highest and lowest prices a stock traded at over the past 52 weeks. 20, opening price, the price at which a stock first trades when the market opens each day. PE ratio, price to earnings, stock price divided by earnings per share, measures how much you pay per dollar of profit. EPS, earnings per share, company's net profit divided by total shares outstanding. 23, revenue, total money a company earns from selling goods or services, top line. 24, net income, profit remaining after all expenses, taxes, and costs are subtracted from revenue. PB ratio, price to book, stock price divided by book value per share, company's price to net assets. PS ratio, price to sales, market cap divided by annual revenue, useful for companies with no profit. 27, book value, a company's total net assets minus total liabilities, its net worth on paper. 28, intrinsic value, the estimated true worth of a stock based on fundamentals, not market price. 29, overvalued. When a stock trades at a price higher than its fundamentals seem to justify. 30, undervalued. When a stock trades below what its fundamentals suggest it's truly worth. Dividend. A portion of a company's profits paid out to shareholders, usually quarterly. Dividend yield. Annual dividend divided by stock price times 100 shows income as a percentage of investment. 33. Capital gain. Profit made when you sell a stock for much more than you paid for it. Capital loss. A loss when you sell a stock for less than you paid for it. Total return. Capital gain plus dividends received. The full return on investment. ROU. Return on investment. Gain cost divided by 100. Measures profitability. CAGR. Compound annual growth rate. The steady annual rate at which an investment grows. Yield. Income generated by an investment expressed as a percentage of its prices. Reinvestment. Using dividends or gains to buy more shares, compounding your returns over time. 40. Cost basis. The original price you paid for an investment used to calculate capital gains. 41. Volatility. How much a stock price fluctuates. High volatility equals bigger swings in price. 42. Beta. Measures a stock's volatility versus the market. Beta greater than 1 equals more volatile than market. Standard deviation. A statistical measure of how widely returns vary from the average. Risk tolerance. Your personal ability and willingness to endure losses in your investments. Drawdown. The peak to trough decline in an investment's value over a given period. Systematic risk. Market-wide risk, recession, interest rates that affects all investments. And systematic risk. Company-specific risk that can be reduced through diversification. Hedge. An investment that offsets potential losses in another position, e.g. put options. 49. Short selling. Borrowing shares to sell now, hoping to buy them back cheaper later for profit. Margin. Borrowing money from a broker to buy more stock than you could with cash alone. S&P 500, an index of 500 large U.S. companies, the most watched U.S. market benchmark. Dow Jones, index of 30 major U.S. companies, the oldest and most widely quoted index. NASDAQ, a tech-heavy stock exchange and index, home to Apple, Microsoft, and Meta. Russell 2000, index tracking 2,000 small-cap U.S. stocks used to gauge small company health. Index fund, a fund that tracks a market index like the S&P 500. Low-cost, broad exposure. Benchmark, a standard like the S&P 500 used to measure your portfolio's performance. Alpha, returns end above the market benchmark. Positive alpha equals outperforming. ETF, exchange traded fund, like an index but traded on exchanges like a stock. Mutual fund, a pooled investment managed by professionals, diversifies across many securities. Sector, a group of related industries. Tech, healthcare, energy. Sectors help compare companies. Balance sheet, financial statements showing assets, liabilities, and equity at a point in time. 62. Income statement, reports revenue, expenses, and profit over a period, also called P&L. Cash flow, the movement of cash in and out of a business. Positive cash flow is healthy. Free cash flow, cash left after company pays for operations and capital expenditures. Debt to equity, total liabilities divided by shareholder equity, measures how leveraged a company is. Gross margin, revenue minus cost of goods sold divided by revenue, shows profitability before overhead. EBITDA, earnings before interest, taxes, depreciation, and amortization. Operating profitability. Current ratio. Current assets divided by current liabilities measures ability to pay short-term debt. Shares outstanding. Total number of companies' shares held by all investors, including insiders. Float. Shares available for public trading. Excludes insider held locked up shares. Day trading. Buying and selling stocks with the same. Buying and selling stocks within the same day to profit from short-term moves. Swing trading, holding stocks for days or weeks to capture a short-term medium price swings. Buy and hold, long-term strategy of buying quality stocks and holding through market cycles. Dollar cost average, investing a fixed amount regularly regardless of price to reduce timing risk. Rebalancing, adjusting your portfolio back to your target allocation as values change. Stock split, dividing existing shares into more shares at a lower price. Value stays the same. Reverse split, combining shares into fewer, higher price shares, often a sign of distress. Buyback, when a company repurchases its own shares, reducing supply and often boosting price. Dilution, decreasing in existing shareholders' ownership when new shares are issued. Ex-dividend date. You must own the stock before this date to receive upcoming dividend. FOMO, fear of missing out. Buying stocks because others are not due to research. Market sentiment, the overall attitude of investors towards the market, bullish or bearish. Correction, a 10 to 20% drop in stock prices from recent peak. Normal, healthy pullback. Crash, a rapid, severe market decline of 20% plus in a short term driven by panic. Dead cat bounce, a brief price recovery in a falling stock before it continues to decline. Short squeeze, when a heavily shorted stock rises sharply, forcing short sellers to buy to cut losses. Pump and dump, artificially inflating a stock's price, then selling it before it crashes. Illegal. Herd mentality, following the crowd's investment behavior rather than doing your own research. Contrarian, an investor who goes against prevailing market trends, buying when others are selling. Noise, short-term irrelevant market fluctuations that distract from long-term strategy. Options, contracts giving you the right, not obligation, to buy or sell a stock at a set price. Call option, the right to buy shares at a fixed price before the expiration date. Put option, the right to sell shares at a fixed price before the expiration date. A bond, a loan you give to a company/government in exchange for regular interest payments. Yield curve, a chart of bond yields at different maturities. Inverted curve may signal a recession. Fed's fund rate, the interest rate set by the US Federal Reserve, influences all market rates. Inflation, rising prices over time that reduce purchasing power and erode investment returns. GDP, gross domestic product, the total economic output of a country, drives market healthy. US Securities and Exchange Commission regulates stock markets to protect investors. Lastly, compound interest, earning returns on your returns, the most powerful force in long-term investment. Guys, these are the 100 terms that every beginner investor should get accustomed to. You've got the vocabulary. Now start investing wisely. Keep this deck handy as you research your first investments. Follow Invest with Dennis for more financial education content. Subscribe on YouTube for stock analysis, market breakdowns, and more. Invest with Dennis. youtube.com/@investwithdennis. Guys, I appreciate you guys watching throughout the generational wealth. Remember, the stock market does have risks. Like I said, this is not financial advice. This is financial education, invest wisely, and I hope everyone can learn one or two things. We have all these great tools right now that we can leverage to learn more about investments because it's very important. With these 100 terms, these are terms you can easily teach family members, children, and everyone in general about the stock market. Remember, don't wait till you go to college. Don't wait to junior college. Don't wait till high school. All these tools we have, college and high school, they might be great, but the earlier you start having such conversation in the household about investments and investment terms, the better we'll educate the next generation. Please feel free to like and subscribe, and I'll definitely catch you in the next one. Ciao.